Let's take a trip through time to explore how money has changed throughout human history and why those changes happened. Our story starts thousands of years ago, when goods were traded directly for other goods. This system is known as barter. Barter had a big problem, finding someone who both had what you wanted and wanted what you had. That's called the double coincidence of wants. To solve this problem, ancient societies began to use items with generally agreed value, like shells or cattle, as early forms of money. Cowrie shells became the world's longest used form of currency, prized for their rarity and beauty. In ancient Mesopotamia, people started using clay tablets and tokens to record debts, paving the way for more formal money systems. Metal coins were a big step forward. Around 600 BCE, people in Lydia, now part of Turkey, minted the first official coins. Coins quickly spread through the Mediterranean, making it much easier to trade. Their fixed value and portability changed economies forever. Different metals were used for coins, such as copper, silver, and gold, each valued according to rarity and usefulness. Over time, kingdoms stamped their coins with images or inscriptions, guaranteeing their value and origin. Ancient China also saw a shift from cowries and shells to metal coins, often shaped like knives or spades. As trade grew, carrying piles of coins got cumbersome. Merchants in China started using promissory notes, an early form of paper money. By the 7th century, the Chinese Tang dynasty introduced the world's first government-issued paper currency. Paper money made trading large sums more practical, and soon other civilizations adopted similar ideas. In Europe, paper money took longer to catch on. It was first issued by Swedish banks in the 17th century. Banknotes quickly spread across Europe. Their value was usually linked to precious metals like gold or silver. Banking systems evolved alongside money. People deposited valuables with goldsmiths, who issued receipts. These were early banknotes. As trust in banks grew, these notes began to be accepted as payment, leading to the idea of modern currency. The gold standard emerged, where each banknote could, in theory, be exchanged for a specific amount of gold. This system helped stabilize currencies and encouraged global trade, especially during the 19th and early 20th centuries. In the 20th century, economic pressures and wars led countries to abandon the gold standard, letting currencies float in value. Governments began to issue fiat money. Its value is based not on physical backing but on the trust people have in the issuing authority. Around this time, the use of checks grew in popularity, allowing people to transfer money without carrying cash. Wire transfers and telegraphic transfers made it possible to send money across long distances quickly and securely. Payment cards like credit and debit cards emerged in the mid-20th century, offering convenience and ease of transaction. Credit cards allowed people to borrow money and pay it back later, changing consumer habits and banking. Meanwhile, ATMs made it easy for people to withdraw money whenever they needed it, day or night. In the 1990s, the internet brought new possibilities, leading to the rise of online banking and digital transactions. E-commerce boomed, and online payment platforms began to appear, making buying and selling instantaneous. Mobile phones soon became tools for banking, especially in countries with limited bank access but high mobile usage. Apps like PayPal and Venmo let people send money to friends or pay for goods with just a few taps. In developing economies, mobile money services like M-Pesa revolutionized how people store and transfer money. Digital wallets further changed the landscape, allowing people to pay with their smartphones in stores worldwide. Contactless payments became popular, especially during the COVID-19 pandemic, because of their speed and hygiene. Meanwhile, central banks took steps to regulate these new forms of payment, ensuring security and public trust. The next leap came with cryptocurrencies like Bitcoin, introduced in 2009 as a decentralized form of digital money. Cryptocurrencies use blockchain technology, recording every transaction in a public ledger for transparency and security. Unlike traditional money, Bitcoin and similar coins aren't controlled by any government or central authority. Some people see cryptocurrencies as the future of money, while others are wary of their volatility and security risks. Major companies and even some countries are exploring their own digital currencies, like China's digital yuan. Central bank digital currencies could offer the best of both worlds, government backing and the convenience of digital transactions. As technology advances, the lines between cash, cards, and digital money continue to blur. Today, people use a mix of old and new forms of money, cash, cards, mobile wallets, and even virtual currencies. The evolution of money shapes how we save, spend, and share value in our everyday lives. From ancient barter to blockchain, each step in this journey reflects solutions to the needs and challenges of the time. Future innovations may lead us to new forms of money that we can barely imagine today. Some experts believe that programmable money, where digital transactions have built-in rules, could become mainstream. These advances might help fight fraud, automate payments, and make global trade even smoother. However, new technologies also introduce challenges, such as data security and privacy concerns. Governments and innovators must work together to balance progress with safety and inclusivity. Today, millions of people still lack access to banking. Financial technology is helping to close this gap. Meanwhile, traditional cash remains important, especially in places where technology is less accessible. Throughout history, the role of money has always been to make trade simpler and economies stronger. Whatever form it takes, money will continue to evolve, adapting to our changing world. As we look ahead, the next chapter of money's story will be shaped by innovations we're just beginning to discover. You can already see hints of the future, like buying groceries with your phone or sending crypto internationally in seconds. Every leap in the evolution of money brings new opportunities and choices for individuals and businesses alike. The tools we use for payment reflect our society's priorities, values, and creative spirit. With every new technology, we see a push for greater speed, convenience, and security. But history reminds us that trust and fairness are just as essential as innovation. People will always need to believe in the value and safety of the money they use. So, the journey of money isn't just about coins or cash, it's about the future of trust between people everywhere. As new forms of money appear, education and adaptability become more important than ever. Understanding the history of money helps us make informed choices for our financial future. At every stage, money has been shaped by technology, necessity, and imagination. Where will the next leap take us? Only time will tell, but the journey is sure to be exciting. From ancient barter to digital code, money's story reveals the ingenuity of humanity at work. So next time you pay for something, remember, your money carries thousands of years of history in your pocket.